Can after-tax contributions that you make to your 401k actually be transformed into your Roth IRA? That answer is yes, through a creative financial planning maneuver. I'll explain that more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. I love the Roth IRA. I get teased on it right here by my co-hosts at the Wise Money Show, the talk show that we have that airs right here every single Saturday. Love the Roth. It's not one size fits all, but more and more people should be using it. And thanks to Congress, there's a lot of Rothification rules that allow you to get a lot of money into the Roth IRA. If you're making 401k contributions, is there a special type of 401k contribution that can actually transform your Roth IRA? If the name of the game is to get as much of your wealth growing tax-free as possible, is there a special way of doing that within your 401k? There is. We've talked about it a few times. I'm going to explain it more here right now. The Roth IRA, what makes it so powerful is when you make a contribution, if you don't need the tax deduction today because you either expect to have higher income in the future, you expect tax rates to be higher in the future, you expect a lot of growth in your account and you want that growth to be tax-free, all reasons to say, I don't need a deduction today, a tax deduction on my contribution. I'd rather not get the deduction today, contribute the money into my Roth IRA, all the capital gains, dividends, all the growth is tax sheltered, but then when I draw the money out, all that growth is tax free. As long as I meet the criteria, I've had a Roth IRA for 5 years, I'm at least age 59 and a half, then you can draw those dollars out, all that growth tax free. And because you never deducted your contribution in the first place, that money comes out not taxable as well. Well, there's two ways to get money into a Roth IRA. You can contribute or you can convert. You can contribute or you can convert. Contributing to a Roth IRA, you are allowed to contribute as long as you have earned income, paycheck money, okay? Earned income, and your contribution limit is up to $7,000 or the 100% of what you earn, whichever is less. So if you're working part-time and only making $3,000, then you can contribute $3,000. If you're working, full-time, have a career, and you make $100,000, you're limited at $7,000. Additional $1,000 if you're age 50 or older. But if you make too much money, you actually might not be allowed to contribute to a Roth IRA at all. Now, this is above and beyond your paycheck money. This is your entire tax, your entire adjusted gross income, actually, all of your income sources. So capital gains, dividends, spouse's income, IRA withdrawals, those sorts of things. If your adjusted gross income exceeds certain levels, and for married filing jointly around $240,000 in the year 2024, then you're not able to contribute to a Roth IRA at all. And you might say, that's not fair. I'm in a high tax bracket. I've got a lot of income. I don't want a tax deduction. I just want to contribute to the Roth. And they say, no, you're not allowed to do that. So those are the parameters on making a contribution. If your income's either below those limits or above that limit, you can still do a Roth conversion. There used to be an adjusted gross income limit on Roth conversions. No longer is that the case. So you could still do a Roth conversion if you can't do a Roth contribution. What's a conversion? A conversion is when you transfer money from an IRA over to your Roth IRA. You can even do this within your 401k now, from pre-tax within your 401k into the Roth side of your 401k. That's a conversion. Any pre-tax money that you do that with, this is a taxable maneuver. So you pay tax on what comes out of the pre-tax side and lands in the Roth side. All right, gets a little technical. I'm going to add on to that while we talk about and get into this question of how can a 401k contribution transform your Roth. There's 3 ways to contribute to a 401k. Most people aren't aware of this. You're thinking, well, I'm aware of pre-tax and I'm aware of Roth, but most people aren't aware of the third way, and that is after tax. You might say, no, after tax is Roth. No, those are actually a little bit different. And not every plan allows for this third way. You've got to check with your 401k to see if you're allowed to make after tax contributions. Pre-tax, self-explanatory. You make a contribution, pre-tax in your 401k, that's a deduction from your income and reduces your tax bill. Roth contributions work the same way as an IRA. You do not get a tax deduction. Roth contributions are, quote unquote, after tax. Pre-tax 401k contributions and Roth 401k contributions share the same contribution limit. And that is up to 100% of what you earn, not to exceed $23,000 in 2024. And if you're age 50 or older, you can do another $7,500. So whether you're contributing pre-tax or Roth, those are the contribution limits. And if you're trying to max it out, you're going to get up to that $23,000 and then won't be able to contribute any more pre-tax or Roth. And that's where the power of this after-tax contribution comes in and why it can transform into a Roth IRA. This after-tax contribution, if your 401k plan allows it, you can contribute above and beyond that pre-tax and Roth contribution limit. Those dollars go in after tax and then they grow tax sheltered, but then the growth on your after-tax dollars comes out taxable. You have to pay tax on ordinary income rates on the growth of your after-tax contributions. But the good news is you could contribute into your 401k after tax up to around $69,000 plus another $7,500 if you're age 50 or older. But not only your contributions, the $23,000, your contributions to your pre-tax and your Roth count towards that $69,000 limit, but so does profit share contributions and company match as well. So you've got to do some sort of fancy calculations to see, well, how much extra can I contribute after tax? But for many people, 20 grand, 30 grand, something like that, pretty significant amount. So with that all understood, how can those after-tax contributions transform your Roth IRA? Because if your plan allows for after-tax contributions, you then need to check to see if your plan also allows for in-plan or in-service withdrawals. If you can do that, then in the years, we tend to recommend people do this at least annually when they're making these after-tax contributions, you are allowed to transfer the after-tax portion, convert it from the after-tax side of your 401k directly over to your Roth IRA. So that $30,000 or 25 grand or whatever you contributed after tax now gets added to your Roth IRA, and instead of growing taxable in your 401k, grows tax-free because it's in your IRA. That is how you can transform after-tax contributions above and beyond the normal contribution limit that goes into your 401k, can transform into Roth IRA contributions. You might look and say, wow, that's a lot more that I could get into a Roth IRA than just the normal contribution limits. That's right. That's why they call this maneuver a mega backdoor Roth conversion. So now you know a little bit about how it works, maybe a little bit more than what you wanted to. The big question is it a strategy you should employ, or just an interesting idea but doesn't make sense for you? You got to work with your certified financial planner. You've got to look at all 6 areas of your financial life because this impacts your cash flow. Of course, certainly this is a tax planning strategy, impacts your investments and plan for retirement, even impacts your estate planning. So right there, clearly touches 5 out of the 6 areas of your financial life. Work with your certified financial planner. See if you're allowed to do after-tax contributions, if in-service conversions or in-service transfers are allowed as well, and work with your certified financial planner to see if this strategy is the right one for you. So if you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.